Good morning. Good morning from Los Angeles. With a little delay, half-hour delay, was putting a couple of trades on. Didn't want to mess those up. Welcome to Trading with Sergio, Wednesday edition. For all the members, reminder, we have a members-only live as usual at 4:30 p.m. Pacific. So welcome. Market keeps melting up like the headline or the title of today's live stream indicates. Yeah, I mean, bonds are kicking into now. Rates are going a little bit lower. Expectation of rate cuts are certainly in the market now for September. And, cutting the rates when every asset class pretty much is at an all-time high. Interesting, but it is what it is. You just deal with it. In the crypto world, a lot is going on. Billions are putting into Ethereum now as opposed to Bitcoin. Bitcoin's kind of stagnant about 118, 121 range. Ethereum has doubled. So something we need to pay attention to, obviously. And I'll talk a little bit about that as well, what I'm doing. And one of my trades is actually involves a treasury asset that Tom Lee has created. Tom Lee of Fundstrat, which I respect quite a bit. And his target on Ethereum is 15,000. It's only 4,500 or 4,700, wherever we are. So there is a lot to pay attention to. Initially, what I'm going to do, though, is I'm going to talk about a couple of topics, 10, 15 minutes, answer questions, obviously, go through some charts, position screen, obviously. And, the drawdown is getting less now. A couple of my stocks are behaving. I've been through these before. I'll survive, I'm pretty sure. And so the new schedule is going to be Mondays, Wednesdays, Trading with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. Today was 10:30, but usually it's 10 a.m. That's why if you do subscribe, or once you subscribe, please do so. Not only share it, but also turn on all your notifications. So if there's a time change, you will get the notification of the time change. When I'm going live on Friday, it's going to be Power Hour as usual, 10 a.m. Pacific, 1 p.m. Eastern. And on Wednesdays, which is today, members only live at 4:30 p.m. Pacific. So if you do choose to become a member, appreciate the support. Please click join. Send me an email, sergio@sergioavedian.com. I have a couple of new members who have not emailed me yet. Please do, because you need to take advantage of the perks that you get as becoming a member. Not only you get the live streams live for members only, but you will also get replays. You'll also get all my trades live. Again, none of this is trading or financial advice. You'll get the trades live on a Telegram chat group that I created. Wonderful, wonderful group, actually. We're all getting along perfectly good. They're learning. I'm learning from them as well, exchanging ideas of different equities, different underlyings, indexes, things like that. It's really, really great. Look, there's, I think, 30 plus of them in there, including me. And, we have 30 sets of eyes, 30 sets of ears, 30 sets of brains. I mean, hey, if I miss something, they get on it. It's wonderful. It really is. Great little community, and it's growing. So if you do join, again, click join on the YouTube page. You'll become a member. I'll get notified, but you need to email me, sergio@sergioavedian.com, so I can send you the link of the Telegram chat group so you can join the wonderful traders we have there. So a couple of topics I want to talk about today. And I'll talk about a couple of things on Friday as well. The market is very resilient, right? And it's pricing in all these things, interest rate cuts and things like that going forward. My idea has been and is going to be, they keep printing and spending, and the M2 money supply is growing. It has grown a lot this year. There's a direct correlation between all asset classes and money supply. Money supply meaning how much money is in circulation, right? M2 specifically. Go check it out. Google it. Figure it out. You look at an M2 chart and compare it to an S&P 500 chart. Compare it to a gold chart. Compare it to a Bitcoin or Ethereum chart now. When there's so much money sloshing around, it has to chase return. When it chases return, it takes things to unreasonable levels, but then that's not for me to decide. You know what's unreasonable, what's reasonable. The price in front of you is the price in front of you. You can argue with it until you're blue in the face. It's not going to make any difference. The market is the market. There's a price. There's an execution at that price, and that price is the market. You can argue with it. You can create personal biases. You can say, oh, that's too high, that's too low. I'm like, that's not for you to decide. There is a transaction happening exactly at that second between two people, two parties. One is thinking it's going lower, one is thinking it's going higher. And obviously, the market is, Jem Carson, one of my favorites, says, it's supply demand. There is a lot of demand, not enough supply, prices go up. Tomatoes and potatoes. You know, people ask me this quite often. They go, well, why is this happening? Why is that happening? I go tell them supply and demand. When there is a lot of demand, for example, I'm glad a couple of our members got in. I didn't, but new issue, IPO came out today. The parent company of CoinDesk went public, right? Symbol is BLSH. Well, it was priced at 31. Some of the members got it at 37 through Robinhood. It opened at 100. I mean, there you go. Why is that? That's because there is tremendous amount of demand and not enough supply, and price gets adjusted. It happens with every single equity. Simple as that. I mean, you can't argue with these things. And when people expect, oh, the Buffett indicator is at all-time high. I know. It's been an all-time high. It's making an all-time high. If you missed that, I have a video explaining the Buffett indicator. Put-call ratios are out of whack. Pretty much everything is out of whack. The PE ratio for the market going forward is out of whack. Who cares? Market doesn't care. Market's the market. Market's going to do what it's going to do. Anticipating a rug pull, anticipating a whoosh to the downside is futile. You're going to lose money. You're going to buy all the puts you wanted on the indexes or whatever not. Under different equities, yes, you're going to buy puts and make money. That's a different story. But if you're trading indexes, they keep grinding higher. They keep going higher every day. And you buy puts, you're just going to get your face ripped. So to me, important thing is, you don't have to be involved, by the way. If you think the market's too high or certain stocks are too high, stay on the sidelines. Why press it? Why press on the downside when there is no downside? When the downside starts, we all know, and then we can participate downside. But at the moment, anticipating a top is futile. Don't do it. On Mondays, I was thinking like buying some puts. I go, Serge, you know better, because Tuesday inflation numbers were going to come out. They always are better than expected. And then a month later, they revise it. But then, the market opens higher. Well, what did the market do yesterday? Melted up. What's the market doing today? Melted up. Tomorrow, you have PPI. I'm sure it's going to be a good number. We'll probably go higher. Who knows? Look, all I'm saying is you either are in or you're out. To me, guessing things like, oh, this is too high, this is that, this indicator is telling me this. Indicators are not telling you anything. Just look at the chart. Chart's going from lower left to the upper right on the indexes. That's about it. Some stocks within the marketplace in the S&P 500 are moving wildly up and down, obviously. But mostly, the rising tide will lift all boats, and the majority of stocks are going up, specifically the MAX 7 is carrying the market. Apple has kicked in the last couple of weeks, last 10 days. Meta and Microsoft and, all-time highs. You can't argue with it. Somebody's willing to pay that price. You may think it's high, you may think it's low. Doesn't make a rat's ass of a difference, because market does not care who you are, what you know, how much money you have. Doesn't make a difference, right? The price is the price. So before I go any further, good morning to everyone. There's a little bit more of you here now. I'm going to go through a couple of topics real quick, maybe 5 minutes each, 6 minutes each, and then I'm going to go through my positions. I'm going to look at certain things, what I'm doing. Maybe I'll add some things while I'm looking at it, because there was a position that I wanted to add to. Otherwise, yeah, that's it. And I'll be back on Friday. But if you are a member, please, if you're here, don't miss today's members only live, 4:30 Pacific. And those couple of members who just joined, please email me, Sergio at sergioavedian.com, so I can send you the Telegram chat group link. So first topic I want to talk to you guys about is all you heard, I'm sure, of trickle-down economics, right? It started with Arthur Laffer, rest in peace, an economist during the Reagan times. What is trickle-down economics? Trickle-down economics is the top 1%, 5% do very well. They make the most amount of money. They spend the most amount of money. They pay the most amount of taxes. They create businesses, hire people to work for them. That's trickle-down economics. Has that been the case, though? If you ask many of the average Americans, middle-class Americans, no, that has not been the case. So what has happened is that the top keeps getting richer, and the wealth divide, the wealth gap between the haves and have-nots is getting wider and wider. That's why I put videos out. I say, listen, you need to invest. These people, when I say these people, I'm not in the top 1%. I'm not probably even in the top 5%. But what I'm saying is that I do well because I figured the game out. The game is you need to invest. You need to invest for your future. Nobody's going to give you anything for free. Nobody is going to give you that. And the problem with it is there's not enough education that's going around from literally elementary school level all the way to college. We create a spender society, right? We used to be a manufacturing society. Now we are a spender society, right? And 75% of the economy is consumer spending. Most of it done on credit cards. I'll talk about that on Friday, what's happening with these buy now, pay later loans. Look, you need to see the picture. The picture is clear. The picture is you need to invest. You need to take care of yourself. The government's not going to take care of you. The rich people are not going to take care of you. You need to do it yourself. The trickle down does not work. Look, I'm a capitalist, full on, but the trickle down does not work. The rich get richer, and all power to them, by the way. The rich get richer. I'm not against it. I'm a capitalist. But do they go open businesses, or do they hoard, or do they go invest in other things, hard assets, because they have figured out the game as well. I have a good friend of mine who I talk to quite often. He said something to me 6 months ago that I go like, yeah, this makes so much sense. What did he say? He said, don't slave harder, save in hard assets. That's the playbook. You got to save in hard assets. Look at all these asset classes, right, that the rich people are in and the top 1% in. And the wealth gap keeps getting larger and larger. And literally, the top 5%, top 10% is carrying the economy because consumer spending that's happening on the lower end is happening on credit cards and people are struggling. But on the top end, they have the cash. They plop it down. They buy real estate. They buy gold. They do all kinds of things. One thing they're not doing is, opening businesses and hiring people. Look at the unemployment levels in this country. Look at the unemployment level in the college graduates over the last 10 years. Extremely high. Why? Well, AI is coming. It's replacing every job. If you went to a 4-year college and got some useless degree, what good is that? Nobody good. So here's the first topic. What I'm talking about here, the economy is heavily reliant on wealthy individuals. No question about it. But is it trickling down? Since Q4 2019, personal spending has risen 50%, 50% in the top 20% of U.S. households. I can attest to that. Meanwhile, the middle class and bottom 40% consumer expenditures have increased by just 25%, half the pace of the top 20%, and most of it done by credit, okay? And we know what's happening with credit cards. I'm going to talk about that on Friday as well. The credit card defaults are going through the roof. Auto loan defaults are going through the roof, specifically on the subprime end. By comparison, prices have increased 24% on average during the same period. So the prices are increasing over the past 5 years to the tune of 24%. 24 divided by 5 is about 5%. What happened to the government's 2.5%? Gaslighting. Nothing. In other words, the bottom 80% of households are barely keeping up with inflation in their spending growth, 100%. How many of you are earning 25% more than you did 5 years ago? That's just to keep up with inflation. Nothing more, nothing less. Have your W-2 paychecks gone up by 25%? No. Overall, the top 10% of earners now drive 50% of the consumer spending. Let me read that again. Overall, the top 10% of earners now drive 50% of consumer spending. And as I said, 75% of our GDP, gross domestic product, is consumer spending, up from 36% 3 decades ago, according to Moody's. Overall, the top 10% earners drive the expenditures. And here's the chart. Look at the gap. Look at the difference. Do you see the gap here? Right? Okay. Well, the wealth gap is widening. The wealth gap is widening because the rich know what to do with their money. The rich don't put their money in a CD or a savings account. The rich go invest. And with that money, they borrow money. And with the borrowed money, they invest some more. They accumulate assets. That's what you guys need to do. You guys need to know or learn. And it doesn't take that much money, right? And control your expenditures. Control your frivolous, expenditures. That includes going to Starbucks every morning, on your way to work, spending $7-8 on a cup of coffee. Save that money, invest that money, dollar cost average with that money, buy Bitcoin with that money, buy gold with that money, because you can do all these things in small increments. You don't need millions and billions of dollars to do this, right? So my advice is don't slave harder. Save in our hard assets. Look out for your financial future. Create a financially free future from banks and credit cards. And again, that is not bad. But all I'm saying is you guys need to do this yourself. Nobody is going to take care of it. One of the reasons I created a channel was because of this. I've known this for quite a while. I'm fine. I'm 57. I'm fine. I'm taken care of. I don't care what happens. Of course, I care about my kids, about what they're going to do in the future. But hopefully, I'm teaching them the right things. Spread the message. Talk to your children. Talk to your friends. Talk to your relatives. At dinner, we shouldn't be all flipping TikTok. We should be talking about these things. How rich are getting richer. Again, I'm not against it. I'm all for it. But the trickle down has failed. It did not work. What works is that duplicate what they're doing in a much smaller case. That's all I'm asking, because that's going to be, the way you get to financial freedom for yourself. A lot of people say, what is financial freedom? Financial freedom is not counting pennies at the end of the month because your paycheck is not enough or it's not keeping up with inflation. That's a start. Then accumulation of assets. That's where it needs to be, because those assets, with the printing of the money, keep growing. They, real estate, Bitcoin, gold, stocks, they keep growing. And you're going to say, well, Serge, everything is so high. Well, you could have said that 6 months ago. You could have said that a year ago. You could have said that 2 years ago. Everything is so high. Well, they're higher yet, aren't they? So all I'm saying is just duplicate what the rich are doing. Close that wealth gap. And that wealth gap closure is going to happen by information and correct education. So good morning, everyone. Luis, good morning. Traveler with your bug eyes, good morning. The other thing that quickly I want to talk about before I go into the positions and what I'm doing on top of everything else is housing. We all aspire to own a home. It's put a roof over our head, but it has become impossible even for a college-educated 30-year-old couple to buy a house these days. Why? Well, because of inflation, okay? House prices are through the roof. Although, are we seeing some cracks in housing prices? Are we going to see a correction in housing prices? Well, if they cut the rates now or start cutting the rates, hopefully mortgage rates will come down, because that is the largest part of home affordability index. And maybe people will be able to afford homes again. For example, I bought my house 22 years ago in Granada Hills for $825,000. At that time, I thought that was an insane amount of money, which 22 years ago, dollars were worth something. Dollars are worth garbage now, right? With fiat currency debasing of the US dollar, losing buying power. But what did that do? Where is that house today, 22 years later? Well, let's look at it. That house today is worth about $1.7, $1.8 million. Okay, I have all that equity in there. However, you're going to say, oh my God, that's so much money. Well, not so fast. Let's figure that out. How do we figure that out? Well, let's say it's 1.8 million. It has gone up, appreciated by $1 million. Well, let's take that. What is that? That's about 110%. Okay? Okay. Take 110% divided by 22. That's exactly 5%. Guess what, folks? That's exactly how much inflation is in the country. So basically, my house has kept me above water fighting inflation. Actually, inflation, I think, is more. I think it's about 6 or 7%. However, if I did not buy that house, okay, where would I be? My money would be trashed, right? So it has just kept pace with inflation. It has kept me above water. Now, at $1.8 million, the numbers are much larger, obviously. To afford a house today, to afford my house today, there's no way I could afford my house today. Let's go with a 20% down payment, $350,000, $60,000, and have $1.5 million mortgage. To sustain that at 7% mortgages, for me, it would be impossible. For me, it would be impossible. How about a college graduate? How about and we're talking California prices, obviously. How about, a 30-year couple, business, have jobs, and they can't afford a house. Median housing prices in the U.S. are over $500,000. This is the median. And with the interest rates, with the mortgage interest rates going up from 3% when we had ZIRP, zero interest rate policy, to now, which is 7%, right? Not most, pretty much everyone, unless you're in the top 5%, can afford a house, to buy a house. Even a starter home is $500,000. In California, for example, a starter home in the boondocks probably would be $600,000, $700,000 today. Okay. But again, hard assets, right? I talked about it in the first segment. However, there are some cracks showing up in the housing market. Maybe that would be good news for first-time buyers. And here it is. U.S. housing market weakness is growing. There is certain weakness in certain markets, but then doesn't mean there are not other markets that are doing the opposite, increasing in value. Obviously, the chart is pretty self-explanatory. The ones on the blue on the left are prices going up in those cities. And the chart on the right, half of the chart is red with the red bars. That's housing prices going down. In June, this past June, half of the top 50 metro areas, this is the top 50 metro areas, saw year-over-year home price declines. Austin, Texas, Tampa, Florida experienced the steepest drops of over 5%. That's a lot. These are the two bars away on the right, Tampa and Austin. They were followed by Miami, Florida, Dallas, Texas, Orlando, Florida. It seems like Florida is taking the lead in price cuts. Now I'm hearing the same thing is happening in California, and same thing is happening in Nevada, same thing is happening in Arizona. Well, yeah, okay, good. Price correction comes. Maybe if the rates go down, mortgages will become more affordable, and then there will be, by the way, it's the first time, for a long, long time that the sellers are outpacing the buyers at the moment. So it's not a seller's market, it's a buyer's market. So if you're in the market for a house, your chance may be coming up. By comparison, in May and April of 22 and 20, of the 50 major metros saw declining home prices. So going back to 2020 and 2022, the same thing was going on. But ultimately, just like the stock market, housing makes a new high. It keeps pace with inflation. It protects you from debasing of the U.S. dollar. In November, just 7 of the 50 largest U.S. metros recorded year-over-year price drops. Okay. Cracks in the housing market are beginning to show. Well, the right side of the chart, those are the cracks. Well, you're going to say, Sergio, what are the blue ones? Well, the blue ones are Philadelphia, Louisville, Charlotte, North Carolina. There are places that housing prices are going up because they're more affordable, although the biggest part of this affordability game is going to be interest rates, right? So maybe that's why the administration would like interest rates to go down, because they're directly related to mortgage rates. At 7% mortgage rate, even on a starter home of $500,000, with somebody going in with $100,000 down and $400,000 mortgage, the payments are over $2,500 on a 30-year fixed. Well, that number was literally half 5 years ago when the rates were 3.5%. So affordability has a lot to do with interest rates, and I wish and I hope that interest rates do go down, mortgages come down, and people can afford a home, because owning a home, is your base, right? I mean, people are going to say, oh, I like renting. I like the gypsy lifestyle. I like going around. I mean, yeah, it's good. But, if you're a single person, maybe. But if you're married, you're having kids and starting a family, owning your home at your ground, at your base, it creates this security for you. And I wish that for everyone. But at these prices, and one other part that I talked about in the first segment was hard assets. Real estate is a hard asset. Why did my house go from 825,000 to 1.8 million in the last 22 years? I've been in the same house since 2003. And when I first bought it, it was at the top, by the way. I bought it at the top. Then we had a correction to GFC. Actually, my house went down to like 650,000 in price, which was quite a bit of a drop. It was about a 20% drop. But is there going to be another great financial crisis? No. Is that going to be allowed? No. But if interest rates come down and housing prices correct 5-10%, it'll give a lot of people a chance to be homeowners, and I am all for that. So with that said, I'm going to, I don't know if the comments are showing up or not, and because I only see 2 comments. Can you guys put a thumbs up, fresh thumbs up, to see if I'm reading the comments correctly? So what are we going to do next? Next, we're going to do positions. Let's see where things are at. Maybe I'll add something. Yep. Oh, okay. So somebody just showed up. Okay. So let me put the positions up. I know what I'm doing these days now, so no worries. And let's see. Okay, so this is the S&P 500. That's the 2-minute chart. We're not interested in the 2-minute chart. We are interested in the daily chart. Let's go to let's go to the positions first. Okay, so what do we have? We have 80 options. I trimmed those of AEVA Technologies. They are going out to August 20th. Stock is 1343. I'm going to trim those, take my loss, be done with this. I like taking losses because it's just not going to work out. Sometimes you got to take losses. I mean, I don't like taking losses, but I have to. Next position is yesterday I put a small position. Look, I'm working on a drawdown. When I'm working on a drawdown, I am not aggressive. I cannot push. I know when I'm cold. I know when I'm hot. And when I'm cold, don't touch me. I am cold, freezing cold. So I reduced position sizes. In fact, I only had 3 positions. Today, I added 2. Yesterday, I added 1. Today, I added 1. What did I do? On Bitmine, which is this is the Tom Lee Ethereum Trust, that he's about to issue 20 billion more shares, $20 billion worth more shares to buy more Ethereum. He's doing what Michael Saylor has been doing with Strategy and Bitcoin. This has become a Ethereum treasury asset company, actually. So what did I do yesterday? Well, yesterday I put on an Iron Condor that's going to expire on Friday. I usually do like 20, 30, 40 lots. I'm so cold that I go like, okay, I'm going to just give it a shot with 5 lots. So I did. I sold, what is an Iron Condor? Iron Condor is selling a call credit spread and selling a put credit spread. So in this case, index is at 63. Well, the stock is at 63. I sold 55 puts and I bought the 52 puts. And on the other side, on the call credit spread side, I sold the 75 calls and bought the 78 calls. So meaning the closer to the money side, obviously, is going to be more expensive. So that's why it's called the Iron Condor. So basically, ultimately, I want for the next 2 days, I would like BMNR to stay between 55 and 75. Pretty good odds of that. So for that trouble, I took in $1 for both sides. Dollar meaning dollar credit, right? Okay, well, at the moment, the position is I can only make $500, and this is a limited risk trade. Both sides hopefully will expire worthless, and we'll find out. If not, we'll roll, or we'll just close the position. But max loss on this, max loss, is 3 points, and that's $1,500. But I took in 500, so max loss is going to be $1,000 if it's below 55 or it's above 75. We'll see. You have a couple days to go. Why do you do this? You do this because you're thinking it's going to stay within the body. The wings are 3 wide, but the body is 75 and 55. And, it's a 63. So this morning it got up to 71. Today's low is 62. So still we're in between. If we stay in between, I'll collect the whole $500. Everything will expire worthless. And that's why you do iron condors on something that you think it's going to stay within a price. Today, I opened a position on HIMZ, which is the 2X ETF of HIMS and hers. Again, I'm doing like small numbers just to test the waters. This is a covered strangle for 2 days now, 48 hours. The options are expiring on Friday. In fact, I may add to this now. So I bought 500 shares of HIMZ, HIMZ, at 1711 or 1712. We're at 1770 or 1768. That's not the point. The point is, how does a covered strangle work? Covered strangle works in a way that I'm willing to buy more shares on Friday, and I'm willing to also let go of these shares that I bought at 1720 at a certain price. So what did I do? I bought 500 shares. I sold 5 of the Friday expiration $16 puts at 35 cents, and I sold 5 of the $18 calls at 45 cents. So I took in 80 cents. Okay, I paid $17.12 for the stock. If it's above 18, I'm going to get taken away. I'm going to get assigned. I'm going to get called away. And so my sell price is going to be $18.80. If I get assigned, if it's below 16 by Friday, which it could be anything, then I will end up buying another 500 shares at $15.20. Why? 16 minus the 80-cent premium, right? I don't mind buying another 500 shares. In fact, I will, before I leave today, or before market closes today, I will add to this because I can see that I can do the strangle and taking in 90 cents, but then now I'm paying higher price for the stock, 50 cents higher. So that's the reason. Next position is Lithium America. Another covered strangle on this. I'm long 8,000 shares at 313, but with the cover calls I sold last month, cost is actually 3. Stock is 290. Well, I sold 2.5 puts and sold $3 calls. If it's above 3, it's going to get taken away. Turn out to be a profitable endeavor. Last but not least, Lululemon. I bought prematurely. I bought actually some calls, not some, a lot of calls, 50 calls of October, 250 calls, strike. And my cost is 437. We're at 440 range, for exactly actually at 437.5 now. So back to break even. I expect this stock probably to get up to 207 to 210. At that point, they should be about 6. I'll chuck them. Although a couple of days ago, they were down to 2.5. So it was in the hole by close to 10 grand. Now we're actually $30 profitable on the position. So those are the positions. But I'm trying to, get out of my cold streak. And when you do that, what do? You trim positions, you pull back, you circle the wagons, you try to stop the drawdown at about 10%. And then, when you start warming up, you do a couple of small trades, feeler trades, and they work out. That means your cold is over, you're warming up, confidence is back, you push. And just like I did, a couple 3 weeks ago, I was up to 15 positions, and then I cut it down to 3, manage, keep the bleeding to a minimum, and then put the gas on when things are working out in your favor. So that's trading for you, folks. That's what you have to do. And that's what I'm trying to do. That's all there is to it. So let's go to the charts. At the charts, what are the charts saying? Let's go through a few charts and then I'll answer questions. Here are the charts. This is the S&P 500. New high. I mean, what is there to argue about? We had a pullback to literally bottom Bollinger Band and then snapping up. Still a little bit of a bearish divergence developing, but can't anticipate that. All these new highs, by the way, are on non-confirming technicals, so I'm definitely closely watching that. Is it going to be convincing enough for me to go buy puts? No, not yet. And this is the triple Q, same thing. Bearish divergence at work, but then there's a hidden bullish divergence. We're on a buy signal on MACD. We're making new highs, obviously. We've been just grinding higher. And why am I arguing with the market? I can't argue with the market. TLT is something I watch, and dollar index I watch. TLT is actually, interest rates are going down today. Dollar index, again, we had a rally. That's when actually the market pulled back. Market does not like higher dollar. And there's a correlation between that. And you guys can see that this is the dollar index 1 year, one day chart. Dollar is down about 11% this year. So actually, that means your buying power has been cut by 11% so far. This is against the basket of currencies. Obviously, you're not dealing in Japanese yen and euro dollars. I mean, things like that. But you need to pay attention to this. And in fact, because of that, gold is all-time high. Still going sideways. Next breakout, this thing is going to go to 4,000. What else? Bitcoin is about 121. This is IBIT, just about to make a new high. Ethereum. This is the 2x ETF of Ethereum. Hello, look at that thing. Well, I mean, you know, yeah. ETHU is the symbol on that. One ironic thing that's happening is that even with Bitcoin pressing to almost an all-time high, MicroStrategy, MSTR, which owns about 70,000 Bitcoin, close to 72 billion, is not moving. Actually, it's going the other way. So I'm curiously watching that. I don't know. Maybe they're lowering MNAV on that. There are a couple of stocks I'm watching to get in. Well, one is Lulu. Obviously, I have the 50 options. Hoping, praying. Well, yeah, actually, we may even be getting a little bullish divergence crossover here. So we'll see. The bullish divergence I'm talking about here. This was the old low. This was MACD. We made a lower low by literally $70, and MACD did not do it. And if we do crossover and maybe get over zero, it'll be a bullish divergence, and then I will hold those options for a little bit longer than getting out of those. What else? So this is HIMS, the one that is, I put the strangle on. Let's see. Yeah, I would like to actually add to that position, to be perfectly honest, before the day is over. Apple, wonderful, new high. Meta, breakout was working there. When it broke out of the 200 EMA, that was it. Now it's catching up to the rest of them. Meta, new high. Microsoft, almost a new high. Amazon, almost a new high. Tesla, a lot of people are interested. Tesla did break out of the wedge that I've been watching. It's kind of consolidating. This thing may take off, folks. So I'm definitely going to trade TSLL instead of Tesla, which is the 2x ETF. I like these types of patterns. So stay tuned for that. Trying to get my feet wet again. Get into the shallow end of the pool. CoreWeave, nasty earnings. Maybe at 100, I'll give it a crack. There are a couple other names that I've been talking about. Lemonade, beautiful chart, new high. Soundhound, definitely buy on pullback now, without a question on this one. We Ride. Chinese Waymo, 988, almost $10. Traded this a bunch of times, as you can see by the labels. Pony AI, another Chinese Waymo, looking good, consolidating before breakout. If you have any questions, please put them up. And what else? That's about it. All I want to do is get to 100% by the end of the year on my trading account. Oh, I had a little calamity on my investment portfolio, investment account. Well, let's go with the good ones first. I own Google at about 174. We're at 202. I own Unity Software at about 21 and a half. Look, I'm not blowing these numbers out of my butt. You can go back and check every live stream I did. It's public info. I'm long Nike. I got lucky. I bought Nike like 54. So what can I say? And I'm hoping Lulu does the same thing that Nike does. It's so oversold that even the bad earnings report that may come out on September 5th is going to be good news. Now the calamity, well, semi-calamity, honestly. I had bought Kava at 74. Then it went to like 90 plus, and then earnings came out on Kava yesterday that were horrendous. Well, okay, it opened at 65. What did I do? I sold 65 puts and 60 puts for September. I want to own more shares. I like the company. One earnings miss is not going to stop me from adding to that position in my long-term portfolio. And I did, but then stock bounced to 72 now. I'm like, we'll see. There's a long way to go to September. We got like 30 plus days to go. Yeah, those are the 4 stocks. I'm actually looking to add a couple of names to it. I'm also intrigued about Ethereum. One person buying Ethereum keeps pushing it up. This is ETHU, right? There are a couple other Bitcoin treasury asset companies. One is BTCM. Missed buying that, of course. And I was talking to the chat group about that. And then the other one is BTC. Is it D? Let me see. I'm actually thinking of buying that one because all these companies are issuing shares, right, and buying Bitcoin. So go with the flow. Don't be shy. You got to trade. That's why we call it trading. Okay, let me see what the other one symbol is. BTCS. Oh yeah, maybe I will buy some of that now. Nope, BTCS. If that's optionable, I may do. Yeah. Actually, I traded that before. It looks like profitably. Oh, this thing was 850. Now it's down there. Okay, 428. Pull back to 4. We can do a covered strangle on this. Let's take a look. For 2 days. Oh, it doesn't have weekly options. Yeah, I don't like doing it. Going out a month on these. But so let's take a look. For a couple days, stock is at an awkward spot. 428. Yeah, and they don't have options for $4, $3. They only have 2.5s and 5s. We may have to pass on that or just buy the stock itself. Yeah, I'll just keep an eye on it. And yeah, BTCS is also issuing shares and buying Bitcoin. This is the hot game, Bitcoin Treasury S, right? So wherever the game is, that's where we got to go. Actually, that's making almost a lower low. So on a 50, okay, but they issued shares. I was short Sezzle at 200 almost, covered like with 10-point profit. And look where we are on that thing. Got cut in half. Sometimes, you got to go short. I want to definitely short Joby, Joby Aviation. That thing is not worth the money. I mean, paper it's printed on, but they're holding it up. It came down to 20 EMA bounce. I definitely want to go short that one. My account's about 85% cash, so I have plenty of cash to do some damage either way. So my calls were look like in trouble. Now it look like my puts may be in trouble on the my put Did I do all this for no reason whatsoever? Wow. Did I? Did I get cut off before the positions? Or did you guys see the positions? Can you guys put a thumbs up, please? If you're still here. Yeah, it's the internet is whatever. I don't know. Anybody here? Yeah, it's technology. What can you do? Anyway, hopefully you guys saw what I was doing with the positions. Shark Stero says spike up on Apple. Yeah, we traded AAPU. Okay, cool. Yeah, I mean, hopefully you guys saw the position screen and some of the charts, right? Okay, sounds good. Yeah, if you have any questions, please put them up. If not, oh, I have like a few minutes. Let me just put the link up if you guys want to come on. If you guys want to come on. Really? Shit. Oh well. There's the link if you guys want to grab it and come on. So BMNR I was talking about. I don't know when I got cut off. I was going because I don't see when I get cut off for some reason. It's okay. If you guys want to grab the link, come on. So let's just take a look one more time to the position. Well, I know you guys went through saw the positions, right? Okay. So share screen. Okay. Yeah. Okay. You guys see that, right? And let's go through the positions real quick. Maybe I'll add something while we're talking. That's that. That's that. That's that. Okay. What's happening? Let's see. What can we add to? And what can we take from? Hymns, I definitely want to add to that probably tomorrow. There's plenty of time. Yeah, everything is doing fine. I mean, I just would like Lulu to pump another 10 points or so I can get the heck out of Dodge with profits as opposed to a loss. But then I'm watching it. If it starts rolling over, I'm out of there. Going in the hole and coming back out of the hole, breaking even, that's an accomplishment. So patience paid, luckily, lucked out. On hymns, what if I do another 500 shares, buy it at 17.55, sell the 16 puts, and sell the 18 calls? Yeah, I think I'm going to do that. Let's buy another 500 shares. 17.55. Are we legging? Yeah, we're legging. Okay, we bought 500 shares. Now we got to go sell the puts and calls. Let's sell the 16 puts again for 25 cents this time. These are expiring on Friday, folks. That's done. So we took in 25 cents. Let's see if we can take in a little bit more on the call side this time. Where are the calls at? 50, 70, 25. So we can take in 85 cents actually. Oh, let's go with 65 cents. Let's see what happens. That'll be 90. Let's see if they give me 65. Nope, they didn't give it to me. Yeah, but I may get it. I'll definitely get 60. I know that. Let's cancel that. Oh, yeah, I should be able to get 65. That would be 90 cents. That's wonderful. Yep, 65 is up. I'm going to be patient with that one. All maybe we'll get 85 cents. Okay. Yeah, I need to sell that. You can't mess around with that. Yep, we're up 60 cents. The calls, I mean. Yeah, that put, yeah, I think I'm going to close that Iron Condor at 50%. 2 days is a lifetime, man. Okay, let's see if we can do that with 50%. So we're going to do the opposite. I hope you guys are watching this. We're going to do the opposite of what we did. So we sold them. Now we're going to buy those 55 puts and sell the 52 puts. Then we're going to buy, no, actually, we're going to sell. No, we're going to buy the 75 calls and sell the 78 calls. 65 debit. I did it with dollar credit. Actually, $5 credit. Let's put it at 55. Let's see what happens. That would be 50%. 55 debit. Let's make sure we did the right thing. So we're buying 75 calls, selling the 78 calls. We're buying the 55 puts and selling. Okay, 2 buys, 2 sells. Correct. Okay, that order is in at 55 cents, which is at 50%. Let's make sure we sell the HIMS calls. And if I cancel it, they move it to 75 cents. You prick. Fucking prick. Excuse my language. I'm talking to the market maker. Well, you mess with me, I'm going to mess with you. So let's go to 65 cents. Maybe 64 cents. Okay, we'll just mess around with you with a penny at a time. 64 cents. Any takers? Nope. 63 cents. Done. Have a nice day. Hey, sometimes you gotta play with their algos. As much as I hate doing it, but you have to do it to get the best price. So now I'm long 1,000 shares of HIMZ at 1733. Stock is 1746. I'm short 10. 2-day out, expire. Oh. We bought the Iron Condor back at 55 cents. We closed it with 50% gain. Lovely. Okay, cool. Cool. We had sold them at 105. I bought them back at 55. Couple of hundred, $250 pays for lunch. So going back to HIMS, I'm short 10 of the August 16 puts at 30 cents. It's only 2 days out, folks. And I'm short 10 of the 18 calls at 52.5 cents. So that's 82.5 cents. So I'm willing to sell this at 1882, the 1,000 shares, or buy another 1,000 shares at 1516, while the stock is 1782 for the next 1730, 45 for the next 2 days. Good for me. Whatever works. Okay, so that's where we are. Hope you guys enjoyed it. Not much else to do. And okay, one question. What are those? Love it. Like it quite a bit. Although, it's been underperforming actually. There's a ratio, by the way, SPY to Class B shares. Look at that ratio. That ratio has been coming down, actually. Since actually he announced his retirement, Berkshire has been underperforming. That's because SPY is making new highs, and then Berkshire is now sitting on 300 and I think 60 billion. What am I saying? Trillion. 360 billion in T-bills. So he's not buying anything. He's selling. He's literally like, I think he's 30% cash. I think that's been the highest ever. Don't take my word for it, but I'm pretty close to those numbers. So look at that ratio. Look at that. There is a ratio chart for that, you know, where SPY to BRKB is. And, you know, if it's reasonable, I would do that. But I would, you know, DCAing into that should be okay. But as you know, SPY is made up of 8 stocks, the high-tech stuff, NVIDIAs and all these things. He doesn't own those. So that's why he's going to underperform. But if we do get a sell-off, he will outperform. Although BRKB will go down, but it will go down less because he has a lot of consumer cyclicals, insurance stocks, and things like that. So, you know, I mean, either way, you'll be okay. As long as you're DCAing, man, you're okay. That's all there is to it. Just 3 minutes. Okay, thank you, Mojo. MSTU is letting me down as BTC is going up. I know. I think I'm just looking at it this way. I think they're squeezing MNAV on MSTU or MSTR, and MSTU goes with it, as you know. It's the 2x ETF of MSTR. I think they're lowering MNAV. I have to look at the MNAV. I mean, for me, so BMNR is trading at about 1.2 MNAV. Maybe they're lowering the MNAV on MSTR and consequently the MSTU. That's why Bitcoin is going up and MSTR is going down. That's the first time I've seen that. So if they're going to take it to par, MSTR and MSTR are going to go a lot lower. I don't think it's going to go to par. I think there's always going to be some premium. Maybe 1.25 would be a good area to enter. There is a chart, by the way. You can Google that, MSTR MNAV, and you'll see the current live, what the multiples net asset value is. So meaning net asset value, how many Bitcoin they hold, multiply that to the Bitcoin by the Bitcoin price. I froze again. I just saw it. Yeah, I did. Oh my God, this is horrible. Okay, we'll just have to end it, I think. Okay, we're back. So multiply that by the Bitcoin price, and freezing again. But anyway, I'm going to end it anyway. And then take the shares outstanding. I think it's over 425 million shares. Multiply that by the share price, and then you come up with a market capitalization. Divide that by their Bitcoin holdings. You come up with the MNAV. I have a video about that. If you guys are interested, go check it out. So they may be reducing MNAV on MSTR, and MSTU follows MSTR. So that's what's happening. Okay, folks, before this shit show continues, I'm going to end the stream because I don't want to keep getting cut off. And you all have a great day. Be profitable. See you all on Friday for Power Hour. So thumbs up, please. I appreciate it. Become a member. You'll learn quite a bit. And if you do become a member, send me an email, sergio@sergioavedian.com. I'll send you the Telegram chat group link. Adios.